Hey guys, how you doing? It's the Intuitive Investor from StockTwits. For those of you guys who may not know about me, I'm an investor who focuses on high risk, high growth stock companies of various different backgrounds. I typically stay with some of the technology. I do a lot of investing with cannabis, but mostly I stick to tech. But I typically trade using three fundamental strategies, which include my intuition, Wall Street sentiment, and technicals. That's the way I've always done it, and I've made some very good decisions along the way. So the stock that I am going to get involved with today is Jumia. Trades on the ticker symbol as JMIA. I got my notes right here. And the reason why this stock fell in my lap recently was because of Citron research. Andrew left. I'm very familiar with that guy. The reason why I'm very familiar with him is because he's tried to short Shopify, which is one of my major investments, on 4 different occasions. And on each of those 4 different occasions, he always used words that were very hyperbolous, like the most, the greatest, and then you can embed whatever adjective after that. The biggest scam, the most fraudulent, just whatever you want to add to that. He always has a history of using those sort of phrases at the beginning of all his shorts. And in Jumia, he called it the most fraudulent or the biggest fraud in the history of 18 years or 17 years of being business. Everything seems to be like the biggest or the largest with this guy. So I don't understand why he continues to speak that way. But at any rate, he's 0-4 against Shopify. If you don't believe me, look it up. I followed him throughout 2017, throughout his calls. And I think he was only correct like 17% of the times. In 2018, I just kind of decided not to follow him because he was just not worth my effort and he was just continuously wrong. However, he has a following, and this is like by far the greatest strategy on mankind. I'm going to start using hyperboles. The greatest strategy ever now is whenever he shorts, wait for it to drop and then just buy within the next week or so, and then you can get a pretty decent stock at a really great price. So I'm not too familiar with Jumia, JMIA. All I know is that that's referred as the Amazon of Africa. They operate out there. So I'm not too familiar with it, but I do know that it IPO'd recently, and its stock price, I think, got as high as, my notes suggest, $49.77. So what happened a few days ago? March 7th, according to my notes, Morgan Stanley decided that they needed to reel it back in a little bit because they qualified as being a very risky stock, and there was a lot of risk on their ability to execute, and the valuation was just really high, and they put a $29 price target on it, and I think it was trading in the 40s, so that started to bring it down. A few days later, March 9th to be precise, Andrew left, came out with this report accusing them of a fraud in essence. And since then, there's been numerous attorneys who are now representing clients, fictitious clients. I don't know, maybe somebody will decide to jump on the bandwagon. But it's not uncommon that whenever Andrew left shorts a stock and calls it a fraud, that a whole list of attorneys start sending out press releases. So it's not uncommon. Actually, it's very typical, sort of like ambulance chasers. there's an accident, then all these attorneys just show up all of a sudden, and they're all trying to add to the thesis that this is a complete fraud. I don't know if it is. I don't know if it's not. But all I'm doing here is evaluating the psychology of what's happened and what could happen on Monday. And the reason why I say Monday, which is tomorrow, March 13th, is because the stock drops after the Citron report substantially, and it went as low as $18.38. And then on Friday, it began to recharge, and I think it closed in the low 20s, 23, I think, 24, something like that. But then Jumia released their own press release, which, here's another one. My pet peeve is when Andrew Left shorts a stock within 30 days of their release of financials, knowing damn well that 30-day period is known as the quiet period, and companies are not allowed to discuss anything financially related, anything that will sway the stock within those 30 days of their earnings report. And it's so annoying that Andrew Left always conveniently decides to short these stocks within that window. And so it leaves a lot of these stocks to kind of just have to ride it. They have to ride it until their until their earnings release. Well, Jumia did something extremely interesting that I hadn't seen before. They were slated to release their report the 16th of March. The 16th of May, on Wednesday. And Jumia decided to release a press release that they're actually going to open the market by releasing their report on Monday instead of Wednesday. And to me, that, from the psychological perspective, means that they're ready and they want to come out swinging, and they probably want to be able to address the accusations by Andrew Left, and they probably have really good news to report, especially when you look at the psychology of when earnings reports are released. I've done videos in the past about the psychology of earnings reports, and basically what it states, and basically what I found online, is that if a report is released, earnings report is released earlier in the week, it always bodes well. And it bodes well twice as much if it is done in the pre-market hours. And so if you ever have a stock that is releasing their earnings report on a Friday after hours, sayonara, goodbye to that one. You could almost guarantee that that's going to be bad news. So the fact that Jumia decided to push their earnings report from Wednesday to Monday, I think Jumia sensed the sense of urgency in investors to wanting to make sure that they understood that they were being ethical and doing everything right. And so the notion that they pushed it up pre-market to get it right, I think, for me, from the psychological perspective, that's a really good sign. And if they're able to address all the accusations on Monday and quell any fears or accusations on that conference call, then this stock will rebound. And so it'll probably make a really good buy on Monday if they're able to do a couple of things. One is address whatever concerns, whatever allegations that Citron Research is accusing them of, and being transparent, especially as it persists to whether or not they were overstating their financials and whether or not they inflated the active consumers that he alleges they did. And if their earnings report is either in line or it exceeds whatever their quarterly expectations were, and if their guidance is improved. If they can do that, then this stock will rebound almost immediately. If any of those three conditions are not met, then you'll probably see the stock trade sideways up until the lockout period. And then once the lockout period, which is about 180 days after it IPO'd, then you can most likely guarantee that the stock will drop. So that is really the psychology of moving up their earnings report. And so I'm really going to be watching this closely on Monday tomorrow. And so I don't know, what are your comments, guys? What do you guys think? What do you guys predict for tomorrow? Please leave comments, any questions you might have, any suggestions for any other stocks to consider. Please, I encourage everybody that's watching this to subscribe to my videos. And if you're on StockTwits, you want to make sure that you add me. I am the Intuitive Investor, and enjoy the rest of your day. Good day.